I can't wait for this episode.
Welcome back, everyone, to the Kingscrowd Weekly Podcast. This is your weekly dose of giving you startup investing and private market insights if you're making investments in alternatives online. Today, I'm joined by Teddy and Scott Katoon. We are here to talk about a couple interesting things happening in the online private markets. And my name as your co-host here is Brian Belay. There's been an IPO that's been pretty hot that we will talk about that did a Reg A Plus offering as well, and up as much as hundreds of %, I think, on the day of trading today. We'll get into that a little bit. We're going to talk about the chart of the week this week. We'll just briefly go into some of the data that we looked at where we had touched on tax season and LLCs versus C-Corps, but just what those deals look like when you're investing on deals online. All right, with this first segment, I want to welcome my co-host Scott here. Scott, I know that a lot of times we hear a little bit of pushback from people outside of the industry that, we need to get some real companies in here, real returns for investors. And in the meantime, right, we have a lot of opportunities that look promising, but we're still waiting for some of those returns. Now, I know this week you had on your own podcast, your own show, Darren Marble as a guest, but want to invite you to share some of your chatter there and just what you're thinking in terms of how do we mainstream this and get more awareness of our industry investing online.
Yeah. First off, I just want to apologize ahead of time. You're going to have the Stephen A. Smith Hot Take Award coming out of me almost this entire show. So bleepity bleep is probably where it's going to end up. It's a huge day. This is one of the coolest days we've had as like a combo in recent memory in our space. Like first and foremost, you mentioned we'll get into like the company IPO, but it's the first Reg A Plus to IPO and appear on the big board of the stock exchange. That's that's insane. All right, so we'll get to that. On my podcast, I got to plug it. The Scott Show, most original name in podcasting. What can I say? I had Darren Marble on the show. I think this is so funny because like all these stories we're going to talk about, like all kind of come together at some point here. But Darren, as people probably know in the industry, is the CEO and founder of Issuance, which works with a ton of companies. And Brian, you could probably get into what Issuance is and does and how Kingscrowd works with it and covers it. And their full disclosure, we do some work with them on our advisory side as well. But Darren's been in the space a really, really long time, like back to like one of the first campaigns in ECF, the Elio campaign, which was another, speaking of IPO, I think, but didn't pan out. But either way, what people now know him more for is Going Public. And Going Public is a show that is near and dear to my heart because before Going Public was Startup Showcase, which I had created in like 2016 as a radio show. And the idea was that people could call in live and invest in the companies that were pitching live on my radio show. Darren took it a notch higher. He made it video. He turned it into basically Shark Tank meets Biggest Loser. And for, he talks about it on the podcast with me, which I think people should check out. But it's like, it took him, and I think this is so relevant to like our time and where we are in the world of crowdfunding and online private investing. The first show took him 16 months from ideation to distribution. 16 months. The second show took 9 months from ideation, season 2, different partner, distribution partner to distribution. The third show took 2 months. And not only did it take 2 months, it's being distributed to what is probably going to be an inflated number on Twitter, but supposedly around 100 million views. We'll get to this, and I believe it because Twitter could just, if you're still on X or Twitter or whatever you're calling it, that they are manipulating the algo. I'm still on it, not talking shit about it. I'm just saying. So I do believe that they will swing that many viewers to the show. That being said, he sent me a reel of it, and it looks awesome. Like Steve Aoki, Baron Davis, Floyd Mayweather, for better or worse, like all these characters coming on. And I think it is just going to be, I think Phil Hellmuth is on there too, the poker player. Like this is how he got this is, I don't even know. But he's put this together in a way that I am fascinated to see how it goes, because for the longest time, nobody gave a shit about this space. Brian and I probably took more meetings than anybody talking to people trying to understand like why you're not attracted to this idea in the space. the idea of building a media show in a space that you can't even find users is insane. It's really, really hard. And the fact that he has this kind of interest and was able to pull this off, we already on the last few shows talked about that there's a lot of PE and private bank interest in the space. All of a sudden, retail private equity is a thing again, or thing for the first time. The fact that Darren is having the success he's having with this show, pre-launch, we'll see how it plays out, of course. But right now, it suggests that there's also equal retail demand for this space. There's interest, genuine interest from investors and people to see what's going on out there and potentially participate. So I just think overall, Darren's a good dude. He's been at this a really long time. I think we all know him, pretty well. Issuance, I am very, very long, and I think I've said this on the show before. I'm very long on issuance as a company because I think that we are entering the de-platform kind of phase of all this. And going public to see it go from where it was basically like this idea to like a show that was kind of half plugged on entrepreneur.com, which is in its own right is like kind of a discount store, to be a featured view on Twitter with the last show being a live stream. I think it's really cool. It's exciting for our space, and I'm excited for Darren. But people can check out the whole show. We talk about all kinds of stuff beyond the show, but check it out.
I think Darren has definitely, I have so much just respect for what he's done and being able to stick with it. I mean, he's been in the industry for so long, and this is, someone who has the grit and who sees the potential and is just going to make it happen no matter what. Now, there have been a bunch of other media shows in the past, right? So there's Meet the Drapers, I think, was one that Republic did for a couple seasons. There's some other people that are out there that are also, trying to create this, quote, Shark Tank, right, for the average investor where you can invest in any company. But I think that it is, from my perspective, I'm curious, what you think, but it is kind of a rising tide floats all boats, right? Like any awareness that we bring in is good for the industry as a whole. And it's somewhat of this self-fulfilling flywheel, right? Where the more retail interest, the more the founders are going to say, oh, hey, I can actually raise substantial dollars, which brings higher quality issuers, which brings more investors in. And, eventually I think it's just a matter of time before we finally hit the tipping point and it becomes more mainstream.
I totally agree. I mean, I think Darren and I've even said it on the show, like the two things we find in common is they're both shameless self-promoters. He is an elite shameless self-promoter. And I don't think he would be here at this stage as long as he's been here without having that skill. And I think that's one of the skills that we need. A lot of times in this space, we got the wrong people who are talking about the space. It's like, I wish they would just be quiet and go hide under a rock. Darren is someone who I think actually is like a perfect, you need Darren Marbles in your space in whatever business sector you're in. You need a Darren Marble, a Kevin O'Leary type deal. I will say this though, the show, I wasn't a big, I mean, I don't even know I said this to him before, whatever, but I wasn't a big fan of the show itself for season 1 and 2. And it has nothing to do with bias because I did a pod or did a radio show. It's nothing like that. I wasn't a fan of my show because I think that the Shark Tank thing is just played. It's just done. I'm so over the Gary V founder bullshit. I'm done with it. And I think most people are done with it. What I think Darren has done with season 3 that I think people find really compelling, and this goes to your boat rising tide or whatever, tide rises all boats. It really does feel like a reality show. It doesn't feel like a pitch show. It's like live action, like people out there racing dune buggies and shit. It's crazy. I want to know what the budget on the show was. I should have asked him. I don't know why I didn't, but it's going to be real. And I think that is probably the only hope we have for a content-driven machine to get investment capital. I think we're going to, and I would love your take on this, but I do think that this is the last evolution of we should be selling offerings via heavily marketed propaganda, for lack of a better term. We need to be in a place, and we did talk about this on the show. We need to be in a place where we're not talking propaganda. We're selling, assets are selling themselves. They are of a high enough quality that we don't need this shit. If we can do cool shows to draw attention to the investors and why and all this kind of stuff, that's great. And, newsletters and all the kind of things that everyone does, Alts.co, Vincent, Kingscrowd, pitch them all. I love it. But we need to get to a place where people are the deals are great. That's really what's going to rise our boats, so to speak.
Yeah. So I think, one of the barometers that people are looking at to say, are some of these deals great, is looking to say, like, what are the types of outcomes? And to date, I mean, the industry is still pretty young. We just haven't had a lot of outcomes. But
Right.
today, I mean, there was an IPO that did a Reg A, Newsmax, and pulling up the chart on my screen here, plus 200% trading up. So definitely a bit of an interesting day, but I don't actually know a whole lot about Newsmax myself. So Scott, I don't know if you have any knowledge to comment, but
I mean, I am not I'm just full disclosure. I am not a consumer of Newsmax. I'll make that real clear. Um, what I think is interesting is it's like we'll talk about the positive. Its IPO represents the first Regulation A plus offering listed on the big board of the New York Stock Exchange, which I think is really cool. The shares are up at, like last I saw, like almost 1,500%. It was a $10, $10 listings per share. As everyone who listens to this should already know, Reg A plus offering, $75 million can be raised. They raised it in like 5 minutes. Like they emptied the 75 million Reg A offering Class B common stock round done, and then it started trading and literally went from $10 to like $262 or whatever the top was. It's absolutely insane. I'm staggering on Robinhood trying to find a way to short this, but I haven't gotten there yet. I know Teddy's probably on there too doing.
Yeah, let's bring our senior investment associate from Kingscrowd, Teddy, in here. Teddy, you've actually done a lot of analysis on crowdfunding IPOs in the past, and again, I think there is also a very wide divide in terms of some of the quality of some of those companies at IPO versus the typical IPO company that people would expect that would be like a household name, like an Uber or a Facebook or that type of thing. But any initial thoughts based on kind of what you're thinking here?
When I was in banking, this was something we used to pitch in our bake-offs. It's like how to manage the initial IPO pop, because like you see this for big companies, you see this for small companies, and we definitely have seen this in equity crowdfunding and Reg A companies going public. The long-term performance is different from the first day performance. And for investors that invested early enough in the equity crowdfunding, they did get a solid return if they were able to sell at IPO date. Now, if you had the 6-month lockup, you're still kind of fucked there. But I think it'll be very interesting to see how this plays out over the next 24 hours, honestly.
I was kind of hoping that we would just watch it start tanking right in front of us.
Yeah, just GameStop. Just
GameStop moment. No, that's speaking of that, Teddy, I'm not giving financial advice, nor am I associated in any way, shape, or form. Whatever disclosure that my lawyer would tell you I need to say, I'm saying it now vicariously. There are numerous, from Barron's, Financial Times, like I would say legitimate news sources, like the headline is literally, is this another, DJT, MAGA, rug kind of pull, like, and it's a MAGA stock. And like, this isn't political. We don't get politics on the show, but it is a MAGA stock. And there's very clearly a large sentiment of United States citizens who want to believe that like they have their own media distribution because they don't trust trad media. And there's no way that does not play a role in this. And there's also, it's like Pavlov's dog. If you like train people to buy your shit for like 25 years, and then you come out before election day and you do like a couple meme coins, which we talked about on the show before, and you do the Donald J. Trump media, which also I believe went public, and had the same effect. Everything he comes through with this is going to have this effect because everyone is waiting for it to do exactly what it's doing, which is shoot up 1,000%. If it's like Trump media, it probably will cut in half, but it will still be a huge win for the guys that got in at $10. And my guess is that like Newsmax, for whatever you want to get into the siding of it, left or right, like it is a popular station at this point. It is. So, it's crazy to me that they went from where they were at a couple of years ago, which is like non-existent, to an IPO. And the fact that they chose to do almost literally what we have been talking about and preaching about for 5+ years now, about like the mini IPO to IPO track is like totally doable. You don't need an iBanker to do this. And they just proved it. So I think that's probably where I would spend my time focused, is what happened.
The only thing I would add to that too is the share price, especially in like the first day or even the first week or 2 weeks of
Yeah.
trading, I have come to learn that it's not really real for most of the private investors because there's usually not just a lockup of shares. So sometimes you'll have a lockup period where you're not even allowed to trade your shares. But from the crowdfunding investors, you probably have your shares held with some transfer agent. It's going to take you a week or two to get those transferred to your brokerage account. So then you can put in the sell order. And so what ends up happening is it's almost this artificial limiting of supply. So everyone's coming in and buying, but there's no one who's actually able to sell. And so it drives the price. And I'm not saying that's the case with this one because I don't know the logistics and the details, but I've seen that happen more than probably half a dozen times with other ones where they will pop for the first day or the first week. And then once people actually get the things into their brokerage account where they invested, a couple of rounds ago, then they start selling and it puts a lot of downward pressure on it. So it's also, I would say, take the share price, especially in the first day or the first week, with a grain of salt.
I totally agree. I think this is where we're starting to see the meme crypto behavior kind of infiltrate our public systems here. You're seeing, you just don't see things go up 1,100% in a day. It's just not typical, except for in crypto. So you start getting people who are like getting the buy crypto mentality, and then there's guys like me and Teddy over here trying to short the thing. That's our job. We're pessimists, Teddy.
I feel like the issue is trying to find shares to actually borrow to short. If with some of these, there's no, or you'll pay crazy rates, right, to borrow them.
As more and more, hopefully more and more equity crowdfunding companies go public, it's like there's so many growing pains we're gonna have to figure out. Like if you invest early on in a crowdfunding company and then you have a 20x to sell on IPO day, but you can't do it because you can't get your shares from the transfer agent, or the company, you have a 6-month lockup and by then it's down 90%. Like there's a long way to go on that, because if investors can't trust that, it's like at an IPO, it's supposed to be the gold, the golden exit, and you're getting screwed on it. Like that.
I mean, hey, Teddy, there's one coming. Didn't you see the Facebook ad? Boxable just secured their NASDAQ ticker.
Oh, boy.
Oh, I didn't see that. We'll have to see if
they must be coming.
We'll
no, they didn't. I'll answer for you.
So
I'll answer for you. They didn't. But it makes one hell of an Instagram ad.
Yeah. So it's like I feel like there weren't enough. Like the equity crowdfunding is always like, okay, invest in startups. Eventually it'll go public and like we'll just figure all that out. And now it's starting to happen. And then there's all this like shitstorm that happens a lot of the time, with, like cloud of structure, people having trouble getting shares and all that. So
it's communications. It's these are just starting. It's kind of a new way of IPOing. It's not the traditional IPO process where you have a large investment bank getting a bunch of demand and pre-selling your shares. And so it's going to have to figure out and improve, but like it needs to improve, because today the number of IPOs I've been a part of, there's no communication, or if it is, it's really bad, even with what they're not legally allowed to say leading up to it. And then getting access to your shares as a smaller investor, it's just the system wasn't built for it. But I think that's why I find it so exciting, is there's still a lot of potential. And also, like, IPOs are only one way that investors in this market are going to make money. We've had companies, repurchase and buy out investors at 10x, like in a short time frame, that are getting awesome returns. So there's M&A and other ways that you will also be getting returns in these markets.
Yeah. I think I've talked about this previously. I think there's also something that needs to be done even on the M&A side, because there have been a couple companies where they get acquired, and the conditions of the deal are, okay, investors in the equity crowdfunding company, they get shares in the acquiring company. But if you're not accredited, you're not allowed to get them, because it's done through a specific provision of the Security Act. And this happened with one of my investments, Oncolize, where they got acquired, and they said you're going to get shares in the acquiring company if you're accredited. And I was like, and if not, you just get a 10% return. I was just like, is that like where the early stage pharma goes? Like if they get acquired, which is kind of what you're hoping for, because generally those companies need to get acquired in order to commercialize. So yeah, even that like needs to be figured out too.
There's a lot of discussion. So like one thing would be, could there be a better way of handling that? The other thing I know that a lot of people are talking about around the legislation, but like the accredited investor definition, does that change to
that would solve it.
Teddy Lyons here obviously knows what he's talking about and what he's getting into for risk. Does it make sense if he wasn't accredited that he wouldn't be allowed to participate in that next round? Probably not. And part of it is probably they maybe want to clean up their cap table a bit, or they're being forced to, by follow-on investors. But it's a lot of these logistics that we're kind of starting to get into now that we're going to be working through as the industry matures, and then hopefully, technology and everything else. None of these things are obstacles that can't be overcome. We just got to start building for that. And I think that's why Kingscrowd, we're trying to build a lot of tools around these types of things to be able to help people, navigate some of these circumstances.
Yeah, I think this is a pressure test also against tokenization, or for it, however you want to look at it. I think the token digital firms out there are licking their chops right now to see how this goes. Is this better that it went this way? Because you kind of expect this kind of behavior on crypto, and I don't mean behavior negatively. I just mean it's characteristic. If you were in the token camp, you're like, this is what we're going to do. We're going to raise in Reg A plus, and we're going to tokenize offer to everybody. And is that an easier, more seamless way? TBD. Is it more on? Is it safer? TBD. Versus this traditional way, which feels more regulated and also comes with some issues. But I do feel like this is a moment. If you're like, hey, you could have gone one of two ways, and they went this way. Super interesting.
We'll let Scott sign off here. Scott, thanks for joining us before we hop off to the next segment. See you, Scott.
Take care, guys. Thanks.
In the next segment today, we want to look at the chart of the week for this week. Now, April 15th, tax day, right around the corner. We did a few weeks ago on the podcast talk a little bit about K1s and some of these different tax incentives, such as qualified small business stock, that startup investing can give to their investors. What we wanted to take a look at was around K1s and also QSBS, the formation type of the company, whether it's an LLC or a C corporation, definitely comes into play. So LLCs traditionally may be the ones where investors may get K1s come tax time. Whereas in order to qualify for QSBS and some of these other incentives for tax benefits, it typically has to be a C corporation. It can't be an LLC. So we took a look at the data to basically say, let's look at all companies that have done Reg CF filings and done funding rounds online and break it down both overall and by industry to see if there's any trends that we can look at. I'm going to pull up my screen here. And what we'll notice first, if we just take a look at the overall view of the percentage of entity types from all of the SEC filings since 2016, is that, in fact, the majority, so about 57%, are C corporations. This tends to be a good thing for investors who are looking to get some of those potential tax benefits, like that QSBS treatment. Now, there are a bunch of other things that go into whether or not it qualifies for QSBS. You have to have a 5-year holding period, has to be investment in stock, can't be like a convertible typically, has to be primary issuance, not secondary. Again, we're not going to go into all the details of that. Check out the article. And also, none of this is tax advice. Consult with your tax advisor. But in general, you can see that 57% of those companies are corporations, whereas around 41% were LLCs. So what this says is, as an investor, right, if you're investing, 4 out of 10 deals that you look at could potentially be an LLC, where you might want to at least have that awareness. Now, this does not mean it's a decision that you are making strictly based on the entity type of saying, I am or am not going to invest in this company, but it's something you should be aware of, because if it does come with those additional tax forms and other things, you don't want to be surprised come tax time. So what we then did is we broke it down by industry, because what we were curious and what we wanted to answer the question is like, okay, overall the breakdown is, around that 56% versus 41%, but what does it look like on an industry basis? Because we had a hunch that certain industries would skew more towards LLCs, while other industries may skew more towards C corporations. And in fact, that is what we found in the data. So you can see here, this is the percentage of companies that are formed as corporations. And on the low end, right, food and beverage, real estate, retail shops, beauty and personal care, you can see that a lot of the more small business type businesses and offerings would fall under those industries. And those are the ones that tended to be more formed as LLCs. Go to the other end of this spectrum, you see companies such as, security, cybersecurity, aviation, aerospace, healthcare, pharma, fintech, energy, business, SaaS, all these companies you may more traditionally associate with, for example, like being venture backable, and VCs tend to want to invest for both the tax reasons and other institutional investment reasons into C corporations. So we do see a much higher percentage of those, upwards of 70%. So 7 out of 10 deals being structured as C corps versus the LLCs. Now, personally, I'll just speak for myself. I'm curious, Teddy. For me, I don't look at this a lot. It's something that I want to be aware of when I make an investment. And especially if I'm investing on AngelList, I know that all of those that are investing through an SPV are probably going to get a K1, but I don't let this kind of like tax tail wag the dog, so to speak, right? I'm not going to say no to an opportunity if it's the best opportunity ever, because whether or not it's an LLC, you could potentially get a really good outcome there. But Teddy, I'm curious, in your own investing, do you ever take any of these considerations into consideration for making an investment decision?
Yeah, I mean, for me, I generally, when it comes to equity crowdfunding companies, like I tend to invest very early on, especially like the med tech pharma space. Like these are companies that are probably not going to work out, but if they do, I'm looking for like the 50 to 100x, where whether it's if it's an LLC, like if it's an LLC but it's a pharma, I'm really excited about, like it's not going to prevent me from investing. I will say, and Brian, you can probably speak more to this, but so like on WeFunder, for example, like you are not investing directly in the company, you're investing in an SPV that will then own ownership shares in the company. And so like with the QSBS, is that what it is?
Qualified small business. Yep.
Yeah. So that still applies for investors in the SPV, right? Like it's like passed down to them.
So I'm not an expert on that. I don't want to provide any advice there. So I would say that it probably needs to be looked at on a case by case basis. I won't say also, like, there are some offerings that even are on WeFunder that aren't through an SPV. So it definitely depends on a case by case basis. But in general, there are very specific criteria for what does or doesn't qualify. So definitely make sure you are looking into that if you want to get that type of treatment.
Yeah. Yeah, because I know when you're on AngelList syndicates, for example, like if they have access to a primary offering, but they're pooling investor capital from accredited investors, like those investors are like that investment is eligible for QSBS as long as the company meets the criteria. But I didn't know with WeFunder and equity crowdfunding. Yeah, I haven't seen a lot on their website about that, and so
they probably won't want to provide tax advice either. But
yeah,
the crowdfunding vehicle is something that's used in some places, right, through Reg CF, regulation crowdfunding, that's supposed to your point, essentially be a one-to-one relationship where that person's still a direct investor in the company. So I could see the argument being made for that. Now, I've also heard that the WeFunder SPVs are perhaps a little bit different than a crowdfunding vehicle also. So again, I won't provide any advice here. You have to consult your tax advisor or look into it more for yourself.
Yeah.
However, like on the K1 side, right, even though if some of these are LLCs, a lot of platforms these days for online crowdfunding have found ways around the LLC K1 needing to issue a K1 requirement. So either, I've gotten there are a few companies I've invested in that will do the K1s, but they've hopefully figured it out where they can basically do software to generate it for their thousands of investors, right, if they have it. A lot of the companies also just have different ways of getting around that. So I will just say, you don't necessarily expect to see K1s, even if you're investing in an LLC in a lot of the crowdfunding platforms, but there are situations where you may get them.
Yeah. But yeah, kind of overall, like when you're doing, startup investing, you're looking for the 10, 100x or higher. You should never exclude a company just because they're an LLC, obviously.
And honestly, so there are benefits, like from the founder's perspective, to having more flexibility for an LLC. You're not getting double taxation at the beginning. I'm not as familiar with what that looks like if you're taking a drug through the FDA approval process, for example, to then get it approved. But you can absolutely convert from an LLC later on down the line. So I know that some companies will start out as an LLC, go for a few years to have that flexibility, and then before they go to raise their first big round of, for example, institutional capital, then they convert to a C Corp. So that is also definitely an option.
Yeah.
Awesome. As a reminder, though, so I'll just do another plug here for Kingscrowd, because we allow investors to track all their portfolio investments in one place. Now, this is just a sample portfolio here. But around this time of year as well, we also have our Tax Center tool available, which will basically run all of your companies against our database of exits and failures, and then tell you if there are perhaps companies in your portfolio that you did not record an exit or a failure for. So you can just see from our sample portfolio here, 3 companies that were recorded as having an IPO being shut down or an M&A deal. And then for these are ones that wouldn't have been, they're not marked as being recorded in my portfolio. This one, again, this is a complete example, so this is fictitious data, but we recorded it as, getting a $50 realized value on this investment, which is not true. But again, what you can then do is you can go year by year and you can see summaries of your exits and failures, and it just helps to flag this. I've used this for my own investments where, sometimes you don't hear from the company. You might not know they shut down and they silently shut down in the last year. If we at Kingscrowd were able to verify that, we will make sure that we record that, and then that will show here. So it can just help you to be a guide. This is not meant, again, to be tax advice or professional advice, but it's intended to help you organize your portfolio and your exits and failures a little bit more. Well, we will wrap things up there for today, but thank you everyone for joining us. Make sure you head over to Kingscrowd. You can sign up for a free account where you get access to all these great tools like this portfolio tool. You can also search among all of the deals that are currently raising capital online. And then for members who want to get that advanced intelligence on these deals, get the ratings and also the Kingscrowd Tops deals, you can sign up for Kingscrowd Edge. So again, just head over to kingscrowd.com to get started today. Until next time, we'll see everyone back here next week.